That's right. I think we are set up for a good bounce in September, and that's what we saw last week because the entire market went up on a broader way. You have the small cap and the mid cap both, surging ahead. So it was a broad-based thing, and as we start this week, there is a central bank action which is coming into play here. That central bank action would begin with the U.S. Fed expected to cut rate by 25 bips and followed by the Japanese central bank, which is expected to go for a status quo at this point in time because of the political uncertainty which is there in Japan. That's something which we need to look out for. FIIs have been there's marginal buyers on Friday, but on a whole they've been net sellers. The market has been purely supported by the domestic institution investors, which are mainly the mutual funds, because of the kind of flows that we are seeing in mutual funds. And the Friday's stock deliveries point to a very good session for the tech stocks, especially Infosys, which saw the highest stock delivery, followed by PSU stocks, where we have seen high delivery happening in Garden Reach, GMDC, Hindustan Copper, and BML, all of them having a delivery of more than 1% of the equity getting. So there is some fund buying coming back into the PSU stocks. We saw that happening for the Nifty Defense, which was up more than 4.5% on Friday. So defense stocks which have seen a recent sell-off, or they've been underperforming, has seen some kind of buying coming back in this last week or so, Aisha.
Oh yeah, absolutely. But one is wondering how much of that infy rally will sustain, because it didn't up until Friday. It was just a 2-day event sort of.
True, and that's because the price was much lower than street expectation, and the kind of acceptance ratio, because this is a new tender route, 15% is kept in for the retail investors, and at 5% acceptance ratio, the equilibrium price for anyone buying a share on Friday or Friday, comes to roughly around 1,500 odd rupees. So that's the reason why the stock hasn't moved. But that also gives the stock a good base to settle in, because there's no if there is going to be a selling pressure coming in, because we have the Q2 numbers coming in, there could be a good maybe a muted number which will come in for Q2 for all IT companies. That comes as a base for them. At the same time, when the buyback goes through, you're going to see an upgrade in the EPS by almost 3 rupees or so. That makes that takes the entire growth of EPS by 10% in this financial year, and that also supports the valuation of nearly 21 times going forward.
And to the point that you were making about defense, once again you are seeing heightened geopolitical tensions across the world. You are seeing order flows kick in, and it's good to see that it's not the usual suspects. It's not the first set of go-to stocks. You are seeing a little bit of churn play out even within the defense names.
True. And that's the beauty of it, right? Because there is a change in the way we are going to do the acquisition as well. If you look at the release that has come from the Ministry of Defense, the procurement process has been speeded. There's a speeding up of the process which has happened, which basically means that now you have revenue capex coming in much faster, and the orders flowing through to many of the defense companies. Earlier, it used to take multiple years for after a DAC approves and then the entire process or the orders are placed before the companies. Now it's going to be much more faster. The expectation is that it will be now at a minimum of 6 months as compared to multiple years earlier. So that also brings in some kind of order flow expectation for many of the defense companies, and that is something important to look at.
All right. Yes, of course.